What happens to stock markets when two nuclear-armed neighbors go to the brink of war? You would think the answer is obvious: panic, crash, chaos. But what happened last week in South Asia tells a more complicated story. Let's break down Mutahir Khan's analysis in Business and Finance Weekly coupled with markets' performance yesterday. It began with India's airstrikes on Pakistani soil. The KSE 100 plunged more than 6,500 points intraday. It recovered slightly but still closed over 3% down. The next day, Indian drones targeted multiple Pakistani cities. The market nosedived again, this time by another 6,400 points. Indian markets also took a hit. In just 2 days, investors there lost $83 billion as fears of full-scale war crippled the region. Then came Friday and a rebound. The KSE 100 rose 3.5%. Why? Not because of de-escalation, but because the IMF gave Pakistan a passing grade. The Funds Board completed a successful review, praising Pakistan's efforts to deliver a 2% primary surplus. The approval was especially significant, given reports that India had quietly lobbied to block it. For a moment, global financial confidence trumped regional insecurity. The conflict's impact was not limited to South Asia. When Pakistani officials claimed Chinese J-10C jets had shot down French Rafales, markets reacted fast. Chengdu Aircraft, which manufactures the J-10C, saw its stock jump 23%. Dassault Aviation, the Rafale maker, dipped 3.1%. Some even called it the deep-sea moment of modern dogfighting. Investor reactions were mixed. According to Metis Global, individuals sold $17.2 million in shares. Mutual funds offloaded another $10 million, but companies bought $12.7 million, stepping in while others panicked. Different players, different reactions to fear. In many countries, war boosts defense stocks, not in Pakistan. That's because much of Pakistan's defense manufacturing is state-owned and does not trade on the stock exchange. Plus, the market is dominated by a few sectors. Last week, only 3 sectors stayed green. 34 went red. Then came May 12th. The KSE 100 surged by over 10,000 points, a record 9.45% gain. Trading was halted for an hour to cool volatility. What triggered the surge? A ceasefire announced by US President Donald Trump after 4 tense days of cross-border strikes. It brought immediate calm to both the region and the markets. Investors responded positively, seeing it as a show of Pakistan's military strength and diplomatic restraint. Trump also pledged to substantially increase trade with both Pakistan and India, adding to the optimism. Analysts now expect strengthened ties with Gulf nations, potential growth in defense and tech exports. Across the border, Indian markets also rallied. Nifty 50 and BSE Sensex jumped 3.25%, their best day in nearly a year. Mid and small cap indexes climbed 4% and 3.6% respectively. Analysts say the rally reflects optimism and diplomacy will stick and growth won't be derailed. It's ironic, isn't it? Just a day ago, war panic ruled the headlines. Now markets are cheering peace. The rebound tells a story. Geopolitical calm plus economic clarity equals to investor confidence. This week showed how fast markets can swing from fear to frenzy. But beyond the charts, bigger questions remain. Can both countries keep the peace? Will the world take notice when nuclear neighbors nearly go to war? And can Pakistan turn this moment into lasting economic stability? Subscribe to DawnNews English for more explainers where geopolitics meets your pocket.